Team, family, friends, and fans from around the world, welcome to another edition of the Real Life Trading Podcast. I got with me today the Krisstina Wise. And me and Krisstina connected a long time ago back on a podcast, a mutual podcast that we were part of. I thought it was amazing that she had two S's. She thought it was cool that I had two R's, both consonants. And that was the first of many connections that we made about our life and our journey. I know most of you are very familiar with Krisstina, as I've been on her podcasts and her roundtables, and I've shared all of her podcasts with this team. But just for those who might not be super familiar with Krisstina, can you give us a quick 2-minute introduction on how badass you are and how you got that way?
Yeah, well, I don't know about that. I guess what I like to say, this gets overused, but you and I have discussed this even between us, but kind of a rags to riches, self-made person, that has started in a trailer home, had a very rough upbringing, and somehow escaped that life and then turned that into what I've been able to create today. And it's been quite a journey, but I think the big lesson to that is that no matter where we start from or what type of circumstances life throws at us, this life is available for everyone. Just get up and dust off and all right, that didn't work. Let's do it again.
When you say this life is available, which type of life?
Well, the life of being financially free and really living the life of your dreams, as opposed to a life that's chaos and crisis and problems or conflict. And, it really doesn't have to be that way.
I like how you mentioned, you're talking about a stress-free or stress-less life. One that's of ease and abundance and simplicity.
Yeah. I love the word ease. when and so much of it comes from this money place, this money conversation that's avoided. Now, I know your group, everybody listening, we're not the ones that are avoiding money, but in general, not having financial conversations, not understanding money, like the insides and outs, the fundamentals, not just investing, but cash flowing and how to move money and why it's important and really connecting money and meaning. And when we start doing this, what I call this equal balance of the philosophical life work, like what is a good life, what's meaningful and important to me, and then the financial practical piece is, okay, how much does it cost to live it?
Yeah.
And we kind of start moving this place of how much money is enough and kind of have a destination and a journey and process without being so chasing the money all the time. And then with it, when we know these numbers and we're very connected to what love is and what a meaningful life is, and then we know how much it's cost, and now we're connected to how we earn those monies, both working and non-working income that pays for the cost of our lifestyle. And we can do that. What kind of automatically happens is how much we start simplifying. Yeah. I think people overcomplicate their lives, big incomes, big houses, big car payments, big boat payments, big vacations, big purchases, lots of debt, financial conflict, spouse conflict, all sorts of things start happening because just as money grows, it's almost like the complication, we create more complications for our life. I can't tell you how many people I know right now going through multi-million-dollar divorces, they're going through, they've done great chasing the money, making the money, but it's just kind of about the money and the status in a way. And now the marriage is falling apart and they're destroying each other, and everything's breaking down. And that's an example of how money can really complicate things when we're not really grounded into kind of the philosophical notion of how it supports a good life. So what automatically comes out of that is just the simplicity. And like you said, and the simpler our lives are, the more ease there is, the more passive asset income we have that can subsidize or fully cover the cost of our lifestyle. Now we just have more space to even be more congruent and in alignment with what we care about and live the life that we set out that we want to live. But the thing is for most people, if I gave you all the money tomorrow that you would need to be financially free, what would you do with your time? And very few people have an answer to that.
Facts. Yep.
So we haven't done the pre-work, which is to know what the hell are we doing this for anyway? Like what does it look like? What are we working for, striving for? What will the money buy? And if it buys time, what will I do with my time? And by having just real clarity and vision and description of what we want to, what we're working towards today and journeying through life today to create for tomorrow, how can we create that if we don't have a vivid visual for what that is in the first place? Because otherwise we just keep chasing. We get to, quote unquote, like the next level, and then nothing really feels different. So the next, and then you're just chasing money and status your whole life. And we're missing life in the process.
I love it. That is great. I'm going to go with the tactical approach, because you mentioned that word and you talked about the philosophical aspect, but then the tactical aspect of you do have to do certain things at some point in time. You mentioned spending a bunch of money on all the big things and not taking it to buy assets. What are your 3 favorite assets to buy, Krisstina?
Well, my 3 favorite assets, first of all, I always like to say every conversation needs to start with how much money is enough.
Okay.
And the 2 factors in that really is how much money on an annualized basis covers the cost of my lifestyle. We have to know the cost of our desired lifestyle. And now we need to have the earnings that cover the cost of the lifestyle today, plus the amount that we need to put away for our future self that's going to want to live off the passive income. And that's the wealth game. The wealth game is to invest, to buy assets of some kind that ultimately go to cash flow and cover the cost of your lifestyle, that then can replace your work and income. So you get the choice whether you work or not. So those are very important numbers to know before we even start asking the questions of where to invest or favorite investments and that type of thing. And again, I know everybody listening has done this type of work, but I just really like to reiterate it. And it's important to review it also. I mean, I do mine on an annualized basis because I change so much and I grow so fast. And what I thought was meaningful or important at some point in time or some number worked for me then, it's different now because I can change so fast, like in 12 months. And, so even re-looking at things over, at least once a year and just keep getting connected to the practical piece to these numbers that obviously are connected to the philosophical piece. But asset wise, I mean, when I'm looking at a portfolio, for me, I'm a real estate junkie. I geek out on real estate. Real estate's porn to me. Maybe I shouldn't say that word online, but I love looking at houses, architecture. I love design. I love every element of real estate investing. If it's a syndicate and I'm just putting my money into somebody else's project, so I can get, I can put in relatively minimal amount for a big deal that I wouldn't be able to do on my own. So I love like real estate syndicates, and I've got really great investors that I get to invest in those. I love residential real estate. So why I love real estate, it's all about cash flow. And I think, people say cash is king. I say cash flow is king. Mm. And, so love real estate. And then sometimes I buy, I buy multifamily, fix them up and flip them. So there's just so many ways in real estate to make money. Plus they're really great tax write-offs. Plus you can leverage your buys and your trades, and the income is in capital gains. Like if you do take the income, and you can 1031 exchange to do tax-free exchange. So real estate's just been my love. I've made a ton of money with real estate over the years. And, and now it sits as my primary piece of my portfolio that, my real estate cash flow fully covers the cost of my lifestyle.
Which is baller. I love it. I think it's incredible. And it does come down to that clarity, because it's the educational piece. Sitting down, understanding what type of asset class that you want to play with inside real estate, because there's so many. So can you give us kind of like a breakdown of what you focus on? Is it single family, multifamily, self-storage? What does that look like? Yeah,
my real estate is mostly single family. I mean, over the years, I've done some multifamily, I've done some commercial, and right now I'm even building 13 units. I'm getting into some minor development and, building and then either cash flowing that or selling it, depending on what numbers work out when, whatever the market tells us when the project's complete. So I'm just now kind of dipping my toe into some development in this next phase stage of real estate that I've never done before. That's super fun. But ultimately, part of what I found, even with my school, my money school, and people going through the program, is that it's like this desire to get rich quick. Like if I can just buy the right asset or just the right investment. And it's really the overnight success story, get rich quick. And sometimes that happens. Sometimes we win the lottery or sometimes people win a lottery. But really the mindset going in is that, there's a lot of fear with people. I mean, I know with what you teach and what I teach, we're teaching people how to think for themselves so that they can become investors on their own and not abdicate their investing to somebody else. And that's really key. So I congratulate everybody that's part of your programs, because it means they're taking the initiative, which is a different mindset. But it's also the mindset of the learning is a little bit slow. It's the slow grow. It's like a big, beautiful 200-year oak tree. They're stunning. Like there's not a more beautiful tree, but it took 200 years, and now look at the shade we get from underneath these magnificent trees and the appreciation. And to use your metaphor, money grows on trees. And so like with real estate, I started with one little duplex and I lived in one side and rented out the other because I wanted to try to, from the get-go, I wanted to see how I could live rent free.
Yeah.
And then once that did well, then I bought my second property and then I bought a third property. And then I thought, well, I came across a couple opportunities and did some flips that did okay, but it was just maybe one property a year for many years. And then I was able to sell one and could buy two and do things. But the thing is there was no mad rush. It was like, hey, I knew my numbers. I knew what I was working towards. I didn't take any big, enormous risks that could have sunk me. So in 2008, when our economy crashed and everybody was doing, fire sales and they were short selling and underwater, I just been so kind of conservative and smooth that I was able to keep everything. Now, granted, it was still tight just because, we were in a recession and money was tight all the way around. Yep. But I didn't have to sell anything. And those assets that I bought back then are a primary part of my net worth that had I not kind of had this kind of more conservative, slow grow, not really, all chips in type of approach, that's what's been able to really create my wealth. And it's to understand that wealth and time go hand in hand. The more time you have to invest and let these assets grow or compound interest, depending on where they are, it's that time factor that matters. So we're just in kind of this slow and steady space to continue to grow our net worth and our asset base, 15 years later, it's pretty astonishing what we can create. 1 year is like, really that little bit of, the market's really volatile or, oh my God, the sky is falling. If we're looking at a, 1 year or two, or hey, I'm rich, crypto is rich like 6 months ago. And now crypto is, I'm not rich on crypto anymore. But if I was just in crypto, I was rich one day and I was like underwater the next day. Yeah. But again, when we're looking at it as this long-term know our numbers approach over 10, 15, 20 years, now we can just keep going and keep the mindset and just look, do I think these will go up? Do I think the market's going to correct and go back up? And assuming you don't have to sell shit to pay your bills when the economy is, tanking. Mm-hmm. But that's why I like the cash flow strategy, because pretty much regardless of the value of my real estate assets, regardless of the total net worth of those assets, I still cash flow the same, more or less, depending on the economy. So, I don't have to be in a position if I, at some point in time, I wanted to live off my assets, I can do that without having to sell them in a down market.
Yeah. All right. Mostly single family. Got it. You mentioned another word earlier on, syndication. Can you explain what syndication is, part one? And part two, have you or do you syndicate any of your single family plays?
Yeah, so syndication is just kind of a fancy word to say you're investing in somebody else's fund. So that would be let's say if we're traded, that would be a REIT. So you can put money into a REIT. You're just putting, whatever amount is, and then, you're getting that ownership and you get those dividends out of that, or however that REIT pays out. So a syndication is basically the same thing that's off market. So what I love about that is that I have, and part of my network, specifically 3 syndicates that I love investing in. So I'll give you an example. One of my syndicate partners, I'm a partner because I'm partnered in the LLC, but I'm not a partner in the business. But they focus on, they're very niche, and they've been doing this for 25 years with enormous results. It's just like win, 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 win. And they buy old, what was once rent-controlled multifamily units in Brooklyn. And then something happens. They get word when these things come out of rent control. Most of them are pretty dilapidated or need a lot of work. So when this group comes across these properties, which that's all they do, is scour the market and have the things, is then they've got their investor pool and they start calling. And so I'll get a phone call, say, Krisstina, we just secured this next investment. Here are the terms. Here's the deck. If you are in, the minimum buy-in's $100K on this one. And this is what our strategy is. We're looking at a 7-year hold. We think we'll be able to pay dividends in year 2.5. And, this is probably what the dividends will look like. But they're using all of our investment pool from their investors to go in and be the cash to renovate the property, get it, everything that needs to be done to get it back up to market rates. And then we're collecting dividends once they get it to cash flow positive based on our percentage in the LLC. And then when it exits, you get a big check in the mail. So that would be an example of a syndicate. What's good about that is if you can find the right syndicates that, have a really proven track record, you can, versus let's say you have $100,000, you can put $100,000 in the syndicate and just kind of set it and forget it and let their knowledge and expertise do all the work. And then you just collect the check. All you have to do is come up with the money, as opposed to if I put that same $100,000 in a single family residence, I'm going to have to get it rented. I'm going to have to figure out a cash flow it. I'm going to have to fix the toilets or get a property manager that's going to help do that. So I call that the difference in real estate, the difference between active and passive investing. So as an active investor in real estate means you're actively involved. And passive means you're really just giving your money to somebody else. Now, the risk to giving your money to somebody else in like a syndicate is if it's a big fail, you're really, you're losing the $100,000. It's not likely that you're going to lose that $100,000 because it's going to be built into the market value. It's not likely that you're going to lose that in your individual purchase. And we know that. I mean, it's risk reward when it comes to any type of investing.
Totally. I love that. Thank you for the explanation. How can someone, in your opinion, decrease the risks of not losing that? In that example, that $100,000, what are some signs to look for? What are some things to be cognizant of?
I mean, when it comes, my biggest financial mistakes, and I've made some real doozies. I mean, I'm a really good example of how many mistakes you can make in the cost of millions of dollars. Yet I'm still here, right?
Yep.
And I've done pretty well financially overall. And this is including massive, stupid mistakes that, are just knowledge gaps, really. But one of the biggest mistakes I've made more than once is not doing enough due diligence as to, like, let's say in a syndicate or something, where people is asking for your money, a friend, an acquaintance, good pitch, and it sounds really good, and you don't do the due diligence and you put your money in and, it goes south. So to me, the people is so crucial. And that's why I love you so much, Jeremy, and why I have a very small network of people I trust in the money industry. Now, there's very few people I trust with my money. And if it's somebody new that's not already in my network, make damn sure that I'm going to hire attorneys. I'm going to hire anything to really do the diligence that I'm not capable of doing. Because I'm a people person. I'm not a detail person. So, I mean, I have attorneys, I pay them up front to do the work if I'm going to part with a large sum of money. And I have my CPA look at things and make sure I'm not missing anything. So again, it's just being very thoughtful in the person first, and then the investment second.
Okay. I like that. I like that you brought up attorneys. What would they be doing? Would they read through the paperwork or the details of the deal to see if you miss something and they can catch it?
Yeah, I'll do that. Well, I'll do a lot of the just numbers with my CPA to make sure that, and he's an investor CPA, so it's not your average tax person. This is a high level tax strategist / CPA that really understands real estate. So when the pitch comes over, since I'm not good with fine print, I'm just making sure we're going through and we're really looking at the numbers, that they are what they say they are.
Yeah.
From the pitch deck. And then the attorneys, a lot of it is just to do some due diligence, to do some digging. Like, have there been any bankruptcies? Is there any stuff on this person that I wouldn't be able to find, but they're really good at digging at these types of things because that's what they do.
Yeah.
So you want to so the attorneys are really for the due diligence on the person, the CPAs, the due diligence on the numbers.
Fair. Help me with the bankruptcy thing. Let's talk about that for a second. Will you do business with someone who went bankrupt? Yes or no?
I mean, yes, because many people I know are super rich and have gone bankrupt at least once in their life. So, and a lot of it came out of taking too much risk and being young and stupid. I've been probably close once or two in my life, but just never went all the way. So yeah, but again, there can be a history of that, or there can be just like, hey, got over leveraged, the economy hit, learned that lesson, won't do that again. And now they've got a track record of,
right,
lots of successful wins.
Mm-hmm. Right. Okay. Yep. That's fair. Because Brittany Turner told me once that she'll never do business with someone who hasn't lost it all.
Mm-hmm.
Right. She's like, I want to know what they did after, or got very close to that rock bottom. I was like, how did you recover? Because that says a lot about someone's character, especially if they admit it. Like, hey, I lost everything, man.
Right.
Like, I was at rock bottom, zero, done, fully. I mean, I didn't declare bankruptcy, but
I don't know how you can play this game and not have gotten close.
Yeah.
So like I said, I've been close. I've never had to file bankruptcy, but
right.
I mean, there's been 2 other times in my life where I thought, holy shit, like, how am I going to pull myself out of this one?
How did you? What were the steps that you took that you were able to pull yourself out of the almost near?
I mean, that's a really good question that I'll just see what comes out of my mouth when I say it. But one is just staying true to the course. Again, it's like that long game, and not panicking in the moment. So it's the panic. Like, let's say that we think Bitcoin and some of our crypto is going to go back up because we're really, when I bought into crypto, I bought in for a minimum of 5-year play. Like, let's say it just stayed the same. I wasn't buying and selling it. I didn't trade it. For me, it was just a store of assets, really banking on the appreciation. And that's with, putting it in some things that I got a few dividends and got a little bit of cash flow off the money that was there. But ultimately, it's kind of like when I purchase other types of assets that have exit strategies. So an example of that would be life settlements. So I really like life settlements. And life settlements are whole life policies where someone's older in life and they can't make the premiums anymore. So the only choice that they have, the whole life policies are expensive. So, but because they're expensive premium wise, people can't afford to make their premiums because some life event has happened. And so the only choice they have is to quit paying, which means they lose everything that they have been paying on for 5, 10, 15, 20 plus years, or sell it back to the life insurance company, which will give them pennies on the dollar. So their funds then, they go out and buy a bunch of whole life policies that from these people that can't afford it, which is great for them because they're getting more money for it than they would by losing it or with the bank. And we win in life settlements as investors because we're getting these policies at a huge discount. And then they pull those together. You invest in the fund that buys a pool that has some max investment round for, like, if it's, $20 million pool, you put your 100 to 250 in, and then you own that percentage of that $10 million pool. And then, you don't see that money. So if I put in $100,000 in that, I know I'm not going to see my money for a minimum of 5 years, and it's probably going to be 7. And I'm not getting dividends. I'm not getting anything. So that's what I call an equity play. Okay. And so a portion of my balance sheet is just equity plays. And that's looking at this is that a piece of my pie in my overall investment strategy is cash flow. And I'm very, I've been just very intent upon, I wanted to make sure that the pie chart piece of my investments was all about cash flow. The cash flow, by holding that asset, the cash flow from that specific group of assets pays for the cost of my lifestyle. So that's the be all end all goal, is that it's always cash flow, because you can't buy groceries with gold. You have to sell the gold to buy groceries. Now with my cash flow from assets, I can hold my gold in form of real estate if it's a real estate, but I don't have to sell it to get the money because I'm cash flowing it. So that's that big piece of the pie, is that intentionality around the ultimate strategy of investing is cash flow, unless it's legacy and you want to pass it on.
Sure.
So that's that piece of the pie. Now, another piece of the pie I have is equity. So the play is not for cash flow. The play is just for equity. And sometimes my real estate's both the cash flow and equity play, but usually it's just cash flow, because I do a buy hold, and sometimes I sell if the market's right, but that's not the strategy. But equity means that I'm buying, let's say, like into the syndicate, that I'm not going to see that money for 5 to 7 years, although I do get some dividends. We get a little cash flow, which is nice.
Sure.
Life settlements, for example. And I buy into some oil and gas funds that have these exit strategies and mineral rights. And so I have this, but these are all equity. And so, and I call this stacking. So what I'll do is I'll try to stack the timelines on those. That it's a staggered thing, that if I always have kind of 2 or 3 equity plays in motion that I'm kind of timing 3 to 5 years apart, then these exits keep coming kind of on a 3 to 5 year basis. Just, this one sold, assuming it did well. And then the next one a few years later that I invested in a couple of years back, then that one matures and pays out. So then that's what I call just the wind flow. That's just the wind flow of cash that drops in. And those are great paydays. So some years, if you look at my income, let's say in 2021, we're in 2022. Yeah. So last year, if you looked at my income, I made over $1 million last year in income. And like more than that, it's close to $2 million of income. I didn't see all that because I exchanged some of that in, but I made, let's say it's a $2 million income year, cash. Yep. And so that's because I had a really nice exit. I had 2 really nice exits last year. So those exits, and then, I had the cash flow just from my normal business operations and everything that I normally do. But now this year, I don't have any big exits like that. So it's not going to be a $2 million year this year, even though it was last year. But it might be another $2 million year 3 years from now if those assets play out the way I think they're going to play out. So that's part of it. And then when I have a big exit, I keep some of the cash. I have a 20% rule that at minimum I'm going to at least keep 20% when I exit, so I can just buy shit, just because holding the money is meant to be spent to live a good life. And then, look at where do I want to reinvest that, the other part of that wind flow. And, I just determine how much I want to reinvest and how much I want to keep with those types of, when those happen. So that way, but then again, it's just this fluid, but that's just based on the exit strategy and timing of when I think these things are going to pay out. And then, and then it's super fun. You get this big payday. You're like, all right, what do I get to do with all this money? Yeah. And, what's next, and fill my investment bucket. And then, just go about this. And then another piece that's really important that I don't think it's talked about enough is, once you start making money and have money in the form of like real assets, you really have to protect this. And so like whole life insurance for me is kind of my savings vehicle, where I can use whole life as a tool, as a vehicle for more wealth creation, as well as the legacy benefits, as well as some tax advantages and other things. But ultimately, that's, like life protection that I have riders on that, which is disability insurance rider that I have on that. And then, long-term care rider on it. So, it's got some real benefits and the legacy that my kids will be able to, keep what I don't spend before that. And so again, that's the protection piece. And then with protection also, you have to start looking at not just your personal portfolio, but how do you protect it? So how do we put the money in different LLCs or companies and umbrella policies, and really look at, the amount of money that's you start spending just to protect your assets needs to be built in too. But that, takes all the different types of insurance. So it's to understand the insurance is a big piece of being properly insured, and using corporations as a method to make sure that you're as protected as possible, that changes over time.
Love that. Okay, that's good. So I'm going to drill down, Krisstina, into some questions about upcoming, since you are a real estate mogul and aficionado in this world. A lot of people are saying the word recession. What's your take on, should people be investing in real estate in the next 2 years? What does it look like? What's your thoughts? What are your plans?
Well, any recession, everything gets affected. So, the number one, the motto for investing is buy low, sell high. And, let's say Bitcoin, for example, people bought high, sell low. And that's what destroys your wealth, is buying high, selling low. We're usually buying when it's crazy and then panic and you sell. So like I said before, with the crypto, when you're not watching the market volatility every day, when you're doing the long term, when you're in a long-term strategy, I know a lot of you guys are day trading, so it's different. Day trading is making income. Portfolio is having net worth.
Yeah, totally.
So it's to make sure you distinguish the two, is that if the working income is day trading, you still want to use a portion of that asset to buy of that income to buy assets that's ultimately going to get you out of having to day trade for a living. Yep. So it's to make sure, I find people confuse that a lot, that they think day trading is investing. It's like, no, day trading is making money. It's the asset base that will pay for the non-working income. The cost of your lifestyle. That's the ultimate game. It's just to never forget that. But that's just it, is that, maybe I lose big in crypto and I lose the money that I put into that. But I didn't panic, because whether it went up or went down was irrelevant to me, because I'm in a 5-year play for that one. It's an exit strategy, like with the equities. So anyway, that's just kind of the mindset on that I really don't even watch the market, except for when the markets are down. That's a really good time to buy. So I came across a few good deals this last few years when things in real estate have been crazy. But ultimately, I didn't buy as much as I would normally buy, because I couldn't figure out a way to cash flow or make money on it. So now it's a good time that if you have cash, to really stockpile the cash. So in this case, cash is king, that those that have cash, when the market corrects and interest rates go up and people were over leveraged and more houses stay on the market and people have to get out from under the fact that they did over leverage because they thought this was going forever, those of us that have cash now can take advantage of a buyer's market. And we want a buyer's market. For as buyers, right?
Sure.
And you only want a seller's market in the investing game if you plan on selling and you're trying to get as much money as possible. But if you're not selling, and you're just buying, just stockpile cash and be watching the market. None of us have a crystal ball, but based on all the factors that, the real estate's going to correct. I've been through 2 market corrections in real estate. One was 2001, we had a big correction with the tech crash. And then the other one was 2008 with the kind of subprime mortgage crash. And then, but it always comes back and, here we sit. But that's just it, is that just watch the market. And especially if it's real estate, find out the area of real estate you're really curious about and you really like, and you think that will be a really good spot to start to invest, or, I'm very specific on locations and zip codes and schools and things that I do as kind of the criteria for my personal investing. So I know my areas, and then watch the market, be going on Zillow and be watching it, see what prices are doing. And the final kind of, maybe not the final, but another important piece of this is who's your network? So I don't think enough people talk about the network, the power of your network, you're leveraging the knowledge of your network as part of this wealth building, journey that we're in. And so I have my people. And so part of my network, like I said, is my tax strategist / CPA. You heard that one. I have my attorneys. I have my insurance agents. I have my Jeremys of the world that when, I need advice on stocks or I need some advice on crypto or different things where I'm just out of my zone of genius, but that's where I want to go. Mm-hmm. You're my person. And then my banker's crucial. Mm-hmm. I have a private banker, right? And they know my financials inside and out, because when I need quick money or quick leverage, I want it fast. So I have all my money and my financials and everything in a package that, remind me too, that's another piece, is how organized your finances are, in a package ready to go. I have my life insurance, cash value. So if I need to get money fast, I can use that. And, I have my people I invest in, like my syndicates and all the people. So the network is really, really important. And so another part of part of my network in real estate is, I am a broker, so I can do it myself. But if I were not a broker, I would have my investor broker, someone like a Krisstina Wise, that's can help you watch the market, can help you make decisions. But I recommend if you're going to invest in real estate and you need a real estate professional, only work with the real estate professional that's actually an investor herself or himself. So, because we look at houses differently, it's a different pair of glasses, that how you look at the value of real estate and how you buy as an investor of real estate than just purchasing real estate. Most people don't think of that either. And any realtor is just going to want the commission and sell any house without understanding that there's these different metrics that you want to be looking at when you're investing in real estate. So make sure you have a lender. You want in real estate, you want to make sure you have a good, close relationship with your lender, with your banker, with your real estate agent, CPA, bookkeeper, tax strategist, insurance agent, and then kind of your key money people that you trust for investments that you make outside of yourself.
It was so cool that you gave that list. I hope everyone's writing that down, because those are some relationships you might not think about as powerful, especially the banker and the accountant and the lawyers you mentioned earlier. Like, just having those people that you pour into, that have that know you well, that know your reputation, know what you stand for, that know what you do. That's extremely, extremely tactically important.
And be happy to pay for them. My people are not inexpensive. On average, we're looking, if I'm looking at my CPAs and attorneys, we're talking upwards of $800 to $1,000 an hour, but they're worth it. When I was trying to save that money, it cost me millions. And it's the most inexpensive dollars you can spend when you're really having these people look after you in a way that you can't see if you don't understand law, if you don't understand these, different numbers and things. So sometimes people are so afraid to get into things because they don't have the knowledge. It's like, buy the knowledge. There's super wicked smart people out there that you don't need the knowledge. I'm not the smartest tool in the shed, but I know people that are so wicked smart, and they're my go-to, and I'm eager to pay them handsomely for their knowledge so that I don't have to get that knowledge myself.
Yeah. Yes. Pay them. Pay for knowledge. Money is much less valuable than knowledge, people. That's an easy transaction for sure.
Easy transaction. Mm-hmm. Being cheap just makes you broke. Ultimately, people are cheap because they think they're saving money. It's like, no, being cheap is actually keeping you from getting wealthy. The wealthy aren't cheap. We love to spend money to make money.
I love that. That's so true. There are certain things I don't spend money on, like alcohol. Like there's a level. There's a level I just won't go above. I'm not saying perfect example. There's a random airport that I travel to, and I'm going down to the British Virgin Islands, and it's out in the middle of nowhere. They have one little small bar, and one cocktail is $25. Just like, nah, dude, nope, I'm not going to, $25 for a shot of vodka and an orange juice. Like, that's not going to happen. But you are 100% correct. You have to know what the value is and you have to pay for it. We have 8 minutes left, Krisstina. This is a burning question to have. And then we're going to talk about something in just a second. You mentioned cities. What cities or places or locations are you really looking for regarding your real estate investing? Places you're keeping an eye on?
Well, I mean, for me, I like to be able to see if I'm investing out of city, for the most part, I'm doing syndicates. So because I don't understand the market enough, you have to really understand the market to do well in real estate, in my opinion. And I can't tell you how many people have bought into kind of these, sexy online invested, buy a house and, I don't know, Tucumcari, New Mexico or something. I've just made up a name. Yeah. And, prices are cheap and and they lose their ass. And because again, you're just investing into the hype of somebody else like pitching that this is the next best thing. So for me, since I like to be able to see and touch it, and ultimately, problems happen or that type of thing, and I know my market really well. So most of my investments personally are in Austin, and then occasionally I'll find a deal that's close by, but they're like San Antonio or Dallas or something where, again, easy drive, easy flight, that if I needed to take a look at it or something happens. And then, then I'm looking at market trends. So when I was starting noticing market trend in, let's say, Park City, Utah and Salt Lake, I was noticing that all of a sudden this Utah, which was never on the map whatsoever, really started to become talked about. People said they're vacationing there. Entrepreneurs are kind of heading to Salt Lake. So I was just noticing, like in my own kind of networks and things, just where I'd never heard the word Park City before, it just kept getting talked about. And I thought, well, this is a new trend, I think. So I go out and visit and take a look and start talking to, real estate people and seeing what's happened and jumping prices and all these things. And so I thought, I think this is going to be a really good market to invest in. So that's become a place for me. And, so now that I have real estate there, with the economies of scale, I'm looking at, okay, I can have one property there, but if I have several properties there, just kind of the economies of scale of getting the whole system down one trip, I can visit multiple properties, or if I'm there, I can take care of everything. So I like Utah. And then another area that I really like right now is Bentonville, Arkansas. So some crazy great things going on there right now. That the town has a really aggressive strategic growth plan in place. And there's a lot of money there, and it's the university's there. So there's things like that. So I'll find little niche markets, but again, I'm just kind of noticing things, and then I'll be like, I'm curious about this. Let me go check it out. So I flew to Bentonville and met with a realtor there, and really turned me around, really taught me everything I think I kind of needed to know to kind of get my feet wet, and then, continue it from there. So those, I'd say 90% is going to be very close local, and then maybe 10 to 15% is going to be outside.
That's fair. And so local, you mentioned the Austin market. There is an event I've heard coming up in August in Austin. Can you tell us a little bit about that?
I would love to, actually. Well, I'm holding an event myself. It's called Exit Strategy, and it's really building your full out portfolio strategy for your exit. And exit means like you have enough net worth and ability it's just like, it's the idea that when you go, if you were an entrepreneur and you're building your entire company for some exit of some number one day, you have to know that number. You're going in to say, hey, I want to build this. I want to sell it for 50 million or whatever that exit number is. And you spend your whole life, however many years that takes, to build that company to be able to have that type of exit. So this is your own personal exit strategy on your personal portfolio. So I'm going to be teaching a lot of what I just talked about, my strategy, my pie chart strategy of how I've built out the portfolio and my stacking, how I stack different investments. I'm going to be bringing some of my investment opportunities to the table. So there's going to be deals that you just won't find on the street, because part of the rich gets richer is we know each other in a way that, the deals that I get offered, most people would never have that opportunity. So it's really these unique opportunities and networks that you just never even know exist. So I'll be bringing my investors. If anybody's interested in real estate syndications or crypto or stocks or these different things, I know this group is really savvy on stocks and crypto, but if you're interested, especially on assets outside of that, you'll learn my real estate strategies, the strategies of the others I work with, and really just get a fundamental knowledge and understanding of what is this exit number and what's the build plan to create it.
You were the coolest, Krisstina. Thank you for being in my life and for bringing so much value and enrichment and connection. I've tried to reach out to almost every person that's on your podcast that I think are synergistic and growth mindset and aligned with contribution and being a force for good. So thanks for being a badass and for enriching so many people's lives and for pouring your divine feminine into the world, just kind of showing light, love, and happiness and teaching everyone about money, just being amazing. So thank you.
Well, thank you so much. And I think the same about you. I adore you.
See you, Krisstina.